Equity markets were up overnight, and this is despite relatively mixed economic data. First off, we had China and European manufacturing confidence hold up better than expected, although market expectations were for sharp declines, and neither of the indices can be described as strong, particularly in the case of China, where the index is still consistent with declines in the manufacturing sector. Turning to Germany, investor confidence has tanked as a result of ongoing market instability and volatility. This is a sign that investors might pull back and we could see weaker German growth on the outlook. Meanwhile, in the US, housing market data was very weak. However, equity markets completely shrugged this off. The equity markets are speculating on a further round of quantitative easing from the Federal Reserve. As a result of improved investor sentiment overnight, the New Zealand dollar gained against the US dollar and is up over 1 cent. New Zealand dollar is currently at 83.50 against the US dollar from 82.50 yesterday. Global market volatility over the past few weeks has put some uncertainty around the interest rate outlook in both New Zealand and Australia. Both countries have central bank decisions coming up in early September, and the outlook has been clouded by instability in the markets. Indeed, the Deputy Governor of the Reserve Bank of Australia yesterday described the market movements as extreme. The Governor then also went on to say it was far too early to judge the economic impact of market turmoil, particularly on growth, commodity prices and inflation. Overall, his comments suggest that the Reserve Bank of Australia is likely to leave the cash rate unchanged over the coming months, and this is despite inflation concerns from the Reserve Bank. The Reserve Bank is likely to take its time and assess the impact of global growth turmoil. Meanwhile, turning to New Zealand, a decline in inflation expectations buys the Reserve Bank some time in lifting the OCR. The Reserve Bank places a lot of emphasis on inflation expectations, particularly at times like these when we have the headline rate of inflation artificially elevated. The Reserve Bank was very concerned last quarter when they saw an increase in inflation expectations. However, this quarter we saw that increase unwind. As a result, the Reserve Bank of New Zealand does have some time before it needs to lift the official cash rate. The Reserve Bank is quite eager to do this. However, current global growth uncertainties mean the Reserve Bank is unlikely to lift the cash rate in September as previously planned.